Hello guys, welcome back to another video. So we have three pairs on our watch list this week here. So we have NZDCHF, EURJPY, USD CAD. So let's just look at NZDCHF and see what's happening. It's because I saw that there is like a lot of potential in these three setups here. So make sure that you watch up until the end. So as you can see here, this is the structure that we have, and make sure that you zoom out whenever you are analyzing your charts, guys, so that you can understand what's going on. Just because if you don't zoom out, that is when you're going to have a problem. So as you can see right here, the market was pushing up. This was our highest point. Then we created a lower high, and then instead of creating a higher high, the market failed to do that. As you can see right here, this is our lower high. Then we had a lower low, of which it's this one here. So that signifies a change of character. So we are no longer looking for buying opportunities. Instead, we're going to look for selling opportunities, guys. So this is your change of character right here. Then after having the change of character, you can also use like your fib tool. That is if you don't know how to map out like your supply and demand or your order blocks. So you can just take your fib tool from the high to the low, and I'll share my settings on this instrument here, just because most of you have been asking for my settings and I've already shared them, but like you don't watch the videos up until the end, that is why you don't know them. So here we tapped into it, then we pulled to the downside, giving us a new break of structure, of which it's this one here. So after even the break of structure, what you need to understand is your pullbacks. You need 3 candles, guys, 3 solid candles that show momentum pulling back to areas of interest. So as you can see here, the first candle, second candle, third candle, fourth candle. So that is a valid pullback that you can use. So this is our low, then this is our protected high right there. And if you use your fib tool just like this, from the high to the low, and guys, there's no need for you to wait for the market to tap into the golden zone only, but like if you want a higher strike rate, you can just wait for the market to tap into this box here, the golden zone. That is when you're going to get like sniper entries, good risk to reward on your trades. So let me just remove this, just because we tapped into that 0.5 level, of which it's a nice area to sell. Just like that. As you can see, the market pulled to the downside, giving us a new break of structure, just because we are pushing to the downside. And the reason why I like to do my analysis like this is for you guys to understand how to map your structures, so that you can know what you're doing, navigate the charts like nobody's business. So as you can see right here, we had a new break of structure just like this, so which means that this is your protected high. Now we are looking for the low that has to be taken out. So if we look closely around here, you'll see that we have the first candle, second candle, then we had a bit of a pullback with 2 candles, then we had the another candle, then the second one came up, then the third one, then the fourth one. So which means that this is a good pullback. So we pulled back into this area here. As you can see, this was choppy price action, but like sometimes you won't get like those nice entries, but like the anticipation would have been you taking an entry at the top of the structure. Reason being, we have liquidity around this point, as you can see right there. So I'm just gonna draw it out for just learning purposes. So after that, we had a new break of structure just around this point here. So whenever we have a break of structure, what you need to understand is your highest point and your lowest point. Look for an area of interest, wait for the market to tap into it, then take an entry. That is how we do it. So break of structure, push to the downside, 3 candle pullback. As you can see, 1, 2, 3, 4, more than 4, guys. So around here, we can just use the fib tool from the high to the low, and your highest point should be the swing high, guys. It has to be the swing high. Swing high, outer structure, not here, not here, outer structure. So after that, we had a nice tap into an area of interest, of which that is the golden zone, but like there was no need for you to use the fib tool here, just because there's an obvious supply zone or order block. So after that, we pulled to the downside. As you can see, this is our new low, this is our new highest point. As you can see, outer structure, everything is outer structure. Just because that is your higher time frame structure, you need to be mapping it on the outer structures. So after that, we are looking at this as our break of structure. So I want to ask you a question, guys. Is this a valid break of structure or an invalid break of structure? Drop your comment in the comment section, or your thoughts in the comment section, and I'll see those who got it right and those who got it wrong. Don't cheat, guys. I'm giving you 3 seconds to just give us an answer. 1, 2, 3. So this is not a valid break of structure. This is not a valid break of structure. Reason being, we have a weak creation here. These are 2 weak creations. So which means that you need to extend your line, and then the valid break is this one here. So after having that valid break, now we know that this is our lowest point. This is our highest point. So which means that this high has to be protected, and then this low here has to be taken out. And then if that does not happen, then it means that we have a change of character in our hands. You are no longer looking for sells. Instead, you're going to look for buying opportunities. So as you can see right there, if you extend your line just like this is a change of character just because we took out the previous high. Ne? So now we are looking at this low here as our protected low that needs to be protected, and then if it gets taken out, we are going back to the downtrend. Ne? So using your flip tool, you can still use your flip tool, doesn't matter, guys. Ne? So using your flip tool from the low to the high, as you can see right there, we tapped into the midpoint, but like we gravitated to the downside a bit. So let me just remove that and use this last candle here as the overall order block right there. Then this is a protected low, like I told you, protected low here, and the high that has to be taken out is this one here. And then if this high gets taken out, then we can continue with our overall buying opportunities. But like at the moment, we are still waiting for what? We're still waiting for the market to do this type of formation, break of structure, come back into an area of interest, and continue buying just like this, ne? Up until we get a change of character. Let me just pull it back a bit. Up until you get another change of character so that we can continue with our selling opportunities or buying opportunities. So we're going to go to the 1 hour time frame or the 15 minutes, just because we use the 15 minute. I'm just going to show you the entry criteria that you need to understand so that you can get into these positions here. So zooming out, you need to zoom out just to look at the overall structures or the areas of interest. So if you zoom up, you'll see that this is the last candle. Yeah, this is the last candle. And going back to the current structure. So as you can see on the current structure, what you'll be expecting is this high to be taken out. We have a high, low. So we need a confirmation entry just like this, no? So as you can see, low, lower high, then we had a equal lows here, then the market broke structures. So which means that this high here was no longer important just because the market created structures within this area here. So change of character came up around this point here, just like that. So this is a confirmation entry. So these are our order blocks here. As you can see, this is an accumulation area, which means that there were orders around this point here. So which means that is where you were going to take your buys. So for now, what I'll be waiting for is a break of structure so that we can get into continuations to the upside now. So let's just look at the other pair. So EURJPY. So EURJPY still on the 4 hour time frame. Let's try and zoom out. So I'm just going to look at the current structure just because I don't want to take a lot of time. So as you can see here, we had our high, low, high, lower high. And then after having that lower high, instead of creating a higher high, we created a lower high, lower low. Then we created another higher high right there. Then which means we have a change of character just because the market decided to change character again. No? So break of structure here, just like that. And after having the break of structure, you need to count your pullbacks. So as you can see here, this was a bit valid, but like as you can see, we had like 1, 2 instead of 3 candles breaking bodies. Ne? So as you can see right there, this is not a valid break of structure. This was just a sweep, and then we had this as our area of interest up until we took out this low point here, just because this was just structures within structures trying to confuse you guys. Né? So after having that change of character, now we know what we are looking for. So change of character, then this is our high, lowest point, just like that. And then we tapped into that 0.5 level, not on the golden zone, né? 0.5 level. Then we can just remove this. And now we know that we are targeting the lows, of which it's this one here. So moving over to the 15-minute time frame, this was a bit quick just because I already know what I am looking for. Né? So zoom out, just like that. So now you have to refine our zones. Make sure that you have refined your zones, but like it doesn't matter if you don't want to refine your zones, it's still okay. So looking at the structures, as you can see right here, we have our high, our low, then we have our high, low, sweep of liquidity, lower low right there. Sorry about that, guys. Now, so we had break of structure right here, sweep of that liquidity right here. As you can see, this is a weak creation. Then we had a change of character around this point here. So this is the entry model that I use for my 1 hour or the 15-minute strategy, guys. Now, so break of structure or change of character right there, tapping into this last candle here, of which it's the order block now. So after having that, now the market is pulling to the downside very massively. So as you can see right there, we are dropping to the downside, but like instead of dropping very nicely, the market pulled back into this area of interest around here, just like that. So tapping into that area of interest means that we can still look for selling opportunities around these points here. So break of structure, just because this is internal, so we're focusing on these smaller structures now. Break of structure, change of character, tap into an area of interest just around here. Seems like a fair value gap. Then after that, we broke structures around this point here. As we can see, the market is pushing up internally to tap into this point here, this point here, and then we can look for those selling opportunities on EURJPY. So the last pair that we have is USDCHF. So on USDCHF, I'm just gonna be quick, map out the structures very quickly so that we can close off this video here. So as you can see, this is the structure around here. This is the structure, and then the market was just breaking structures to the upside. Break of structure around here. Then now we had this as a high, then this is a higher low, then we were expecting a higher high to take out this previous high here. Then instead, what happened is that the market took out this low here, taking out the low, then we pull to the downside, pull back, dropping to the downside again. So which means that this is your break of structure again. So let me just make it a bit professional, just because I'm trying to map out the structures very quickly so that we can close off the video, guys. So break of structure right there, then we tapped into an area of interest right here, then another break of structure, of which it's this one here. And then as you can just extend the charts, you can see that we didn't have any 3 candle pullback up until this area here. Let me just zoom out so that you can see what I'm talking about. So around here, we didn't have any 3 candle pullback up until this point. Then we pulled back, so which means that this is a protected high. And then we have a fair value gap around this point here. So fair value gap or imbalances. So this is how I map out like my imbalances. Then we have our overall supply zone, of which it's in line with the imbalance now. So we tapped into the imbalance and also tapped into the supply zone. So around here, now we're going to look for selling opportunities, taking out this low here. So 15-minute time frame, structure confirmations, very important stuff right there. So as you can see here, we can just zoom out on the charts. Then we have our break of structure right here. So now we are in an uptrend. We tapped into the area of interest, then we took out this low here, leaving this large imbalance here. This is a large imbalance area. So as you can see, this is a large imbalanced area, and there's no way that you can take an entry within this point and then your stop loss is just this big. There is no way, guys. You're killing your risk to reward right there. So as you can see here, let me just remove this, and we can have our flip tool from the high to the low. Now we can just use this golden zone, just because the golden zone is very important. That is why I am opting into it, just because I know that there's no way it can disappoint me, guys. So around here, we can just have an entry, stops just around this point here, 40 pips, 41 pips. It's okay, just because the risk to reward would be a lot better, unlike taking that big stop loss entry with 70 pips. So 6%, 6.13% instead of taking something like this. So let's just extend that imbalance. So let's say maybe you took the entry around here, your stop loss is just above here around 80 pips, then the take profit is around 265, of which it's unrealistic, but like 1:2 is good risk to reward, just because you are willing to lose 1% to gain 2%. In that manner, you're going to be profitable, guys. And for those who don't know what to use whenever they're calculating their stop losses, you can just use position size calculator on my FX book, guys. So here, as you can see here, you can have like your GBP, JPY, that's your currency pair, and then your account size. So let's say maybe you bought a 100k account on Funded Next. You can just write out account size 100k, and then risk 1%. Let's say maybe you are risking 20 pips, you write 20 pips, then around here you click calculate, then that is when it will calculate your risk. Just because whenever you're trading with like prop firms, you just need to use proper risk, guys. So make sure that you check out Funded Next using the link in the description below, and also join the free Telegram. I'll see you on another one. Peace and love.